Hey traders, it's September 4th. It's past midnight here in Korea. It's actually still Thursday back in the States, so this is a Thursday day trade, and I'm going to go over the market profile setup in summary, because I made about an hour plus long video explaining this trade, which was way too long, but it went step by step and went into the live setup prior to the market opening, and I was there right there with you as the trade started to set up, and some false breakouts that I didn't take, and my explanation why I didn't take it, and I was right there, and then the actual setup, which I missed, and I can explain in the video if you watch the hour-long video. But right now I'm just going to go into the market profile setup that I always talk about, and I'm going to explain to you and show you both on gold and oil. Oil first. I did make a trade on gold earlier and made a profit off of that, but I'll go into that right after this. So first thing is oil. So we'll just zoom in right here, and I will just show you right now. Went ahead and drew this in. So before the market opened, we just had a flat ranging day, right? So just you can see the moving average is kind of flat, and price just moving up and down within here, right? Okay. And I actually talk about how to trade this, because you can still trade this if you're in a sideways range, but that's an hour-long video. Now the main thing we're looking for is a breakout, right? Breakout to the top or breakout to the downside. And one thing I always talk about is if the market is ranging up and down for a very long period, and this was the entire period actually, that it's like a coiled spring full of energy. Once it moves and breaks out, it's going to really move. And you can see that we made a 200 tick plus move off of this trade setup, and I'll go into details on that as well. So I'm gonna actually show you guys off of another chart that I use on NinjaTrader, which is another broker that I use, and the chart system. I have an indicator here that I use that shows me all the market profile levels in detail, and this is actually how I execute my trades. So same thing in range up and down. You can see the chop, right? And then it finally breaks out. You know, zoom it in a little bit better. I know I got two charts here. One's just a smaller range period, and one's a larger. The larger one's here on the left, smaller range periods on your right, so you can get it more precisely. Okay, so let me see. Zoom out here. So on the bigger time frame, you can see off of this chart basically what happened. We finally got a breakout, and it broke out really hard to the upside. Trend started to slightly move upwards, and all we were looking for is a retest of high value area since it broke to the upside, right? High value area is the red line, dotted line here that you can see on the chart. Zoom in a little bit. All right, broke out of it, came back down. The first test of it, you always want to buy, right? And then you finally got the signal to buy as this thing pushed away from the line, right? Buy, 13 tick stop. So even if you got in here at the 46, 35, even up to the 40, 46, 40, the 13 tick stop never hit it, right? Because once it tested it, it bounced above it, right? And then you were able to make about 10, 20, almost 30 ticks off of that move, depending on where you got it. If you got in right at the market profile after the first test, you got 30 ticks off of that move. That would have been nice. Now, if you would have held, and the hard part and reason why I missed out on this trade and I didn't like it was because it kept coming down and testing it over and over again, right? And actually broke down below it, but then moved up over and over again. So this was really good support. But after about the third test, as you can see, it finally broke out, right? And after that breakout, if I zoom out, we had that final breakout, and that was our 200 plus tick move off of that. So if you had one contract, per one contract, you would have made $2,000. 10 contracts, $20,000. 10 contracts, 10 contracts, you would have made $20,000, right? So days like this, like I said, compression finally gets released, boom, to the upside. Or if it would have went down, it would have exploded to the downside. Either way, the trade setup still works. Market profile is proven again to work. Breakout, retest, right? and then it goes in that direction. And then once that happens and the moving average starts spreading out like that, if it comes back down and you have a small retracement like that, you can still take that trade right here. The best one is down here though, but once it starts to trend, you gotta look for a deeper retracement. And using this chart alone, if you would have missed this one, you could have got in here 1, you could have got in here 2, you could have got in here 3, and made, you know, anywhere from here, let's say 20, 40, 60, 80, 100 ticks off of that move before it actually came down. And then if you would have got in here, let's say at the 60, 20, 40, maybe 50 ticks, right? And then it actually went all the way up about 60, 80 ticks from there. So would have been able to make over 100 ticks even if you got in that first retracement down here as the moving average moved up, spread out to the upside. So on trend days, when it really moves, it barely pulls back. One thing on oil that I noticed, and those are days you make a lot of money. Now it's finally starting to move down, but we just moved 200 ticks today already, you know, and no news. It's just moving. Okay. But the main thing to realize or to learn from here is the focus is the breakout of market profile, retest first time, and then long. And again, the reason why I missed out today, I didn't like this choppy action going up and down, you know. Once it hits it and breaks, it should just move. I like those kind of days. It's nice and clean. But you still would have been able to make money off this first test. And if you would have been bold, you could have got in the second or third time. But by this time, I would have been exhausted. But you can see that's why once it does move, it really starts to move in that direction. So let's see on the smaller time frame, and I'll make this a little bit bigger. So it gets chopped up, and for some reason the market profile levels are not showing on here. Yeah, can't really show you off of this one, but you're able to see off of this chart, which was great. Thinkorswim, same thing. As you can see, you got your market profile levels right here in the red, developing over and over again. That's pretty much like your ceiling that you're looking for it to break. It broke out up here, but immediately came down, so that wasn't a trade. Broke up outside of it, held it, touched it, respected it, held it, respected it, and you could have bought right here for a 13 tick stop. And if you bought in right at the, actually on the chart, the more accurate chart, the price point was at the time about 46.31. So if you got in at 46.31 right here, you know, so 30, let's say 31 here, 21, well, I mean, you don't have to, I just have to go down 10 ticks. You can see right here, let's zoom in, 10 ticks below here at 21, never got touched. So you're risking $100, $130 off of this trade to make $1,000 to $2,000. That's unheard of, and that's why you can make money over time, because the reward and risk is so great, especially in the markets, especially in the way that the markets are moving these days. Okay, and that's really what I want you guys to take away from this, is that you can make lots of money off of this and only risk very little. So say that you did get stopped out, but then it comes back up above here and then retest, and you bought it and it does work. I mean, what's $100, $130 per contract loss when you can make that much multiple times, 10 to 20 times now? A 10 to 20 to 1 reward to risk ratio, that's huge. That's unheard of. It's hard to find something like that, right? Especially as a day trader. But this methodology in trading oil futures, it works almost every day. It's very consistent. And if you're wrong, and you will be wrong at some times, you already know the risk. You know how much you're willing to lose off of that trade. So your loss is already defined, right? But the reward potential is that much greater, and that's how you're going to profit over time. So let me go over to oil now. Excuse me, gold. Same thing, guys. Same thing. And this is what I was actually looking for on oil, but it happened on gold earlier. and I'll pull up my other charts here. Let me see. Okay, and I'll change this over to gold. And while we're waiting, I'll show you right here. Same thing, sideways movement, just ranging up and down, up and down, up and down, right? You got your floor here, the low value area, and then it never even broke it really. It broke it earlier in the day, but you know, we didn't have this actual develop over time until later. So this one wouldn't even traded that. So watch this develop over time. It's kind of just ranging up and down, right? And the box kind of gives you an idea that helps. I drew it in to help you visualize a little bit better. And look what happens. Finally it breaks out of it. And what does it do? Come back up, retest the low value area that was shown right here, right? And if you would have sold here, drops, right? And then if you would have held on to that short, it dropped all the way down to about the 1121 area right here. So that's 10, 20, 30, 40, 50, 60, 70, 80, 90, 100 ticks. That was already 100 ticks off of gold. But I made a quick profit, got out, and was able to make, you know, a quick 40 to 50, 60 ticks off of that thing, just off of a few contracts. And that's how you can make money. All right. So same thing on gold. And let me go into the more detailed chart. This should show you exactly where we broke out. For some reason it's not showing very well. Well, we had our value areas, but this is technology. So basically same thing. Was moving sideways like this, right? Finally broke out to the downside, and then we came back up and retested this. There was a sell signal right here, and then it just dropped after that. But unfortunately it's not showing on my chart here. Okay, well, you get the picture on the Thinkorswim chart, and you have the value areas below and above here. So you know, this one's a little bit higher value area, so you know, it would have been nice if it went all the way up here. But Thinkorswim already gave you the low value area here during this period and this period, so you just kind of combine those together. And if I were to draw a line there, that would have been your reference point to sell, right? Okay, so same thing, in a range, breaks out, comes back up into low value area, right? See the trend starting to move to the downside, so you would sell and break out below low value area. So sell, came back up, retested it first time. This one didn't even test it more than one time. Tested it one time, 13 tick stop above there, never even touched it, and nice down move, right? Very simple. And you only take these trades every day, and you can make, I mean, today was a 100 tick move off of this, and it came back up after this nice downward move, and look what happened. Came back up against it, right? And then it's moving back down again. But this initial move, remember, the first time trade is always going to be your best. And look at that, got a nice little 100 tick move off of that, okay, and 200 tick move off of oil, and now it's starting to move down. So, and that's fine. It moves down, and moves down deep enough into these value areas, you could buy, and it can move back up again. So that's the beauty of the other setup. But what I would look for is not a buy here, right? I'll look for this thing to overall come down maybe to the 76% retracement, and see if it lines up with the market profile levels. And if it does, that might be a good trade as well if I missed out on this whole move. So 76%, look at it, it actually lines up right where it broke out of. So if it does come down there, first time test, while this moving average is still looking up like that, and it moves down pretty quickly down here, you know, that could be a worthwhile trade right there. All right, so I hope I was able to summarize that for you very clearly. I really wanted to review this video because or review this trade because it was very clear both on oil and on gold. Sideways market range, right? These are the best because when it finally breaks out, moves in that direction, finally breaks out. So this one was a great example of a long. Move all drawings on oil, and this was a great example of a short on on gold. Okay, so with that said, I will close this video out. Hope you guys learned a lot. Happy trading, make lots of money, and I'll talk to you guys soon. Bye.